Welcome to Pro News Flash. The Euro-USD pair is set to renew its September highs and reach its highest levels since 2021. Let's dive into the latest developments. The dollar index returned to last year's lower bound, which we had not seen since 2022. The drivers are investment portfolio diversification, concerns about the U.S. economic growth slowdown, rumors of FX interventions, and active selling by carry traders. With the weakening of the dollar and the interest rate differential across the 8 most liquid emerging market currencies, this strategy yielded 18% last year, the best results since 2009. Since the beginning of the year, the strategy has already yielded 1.3%. According to Morgan Stanley, Bank of America, and Citigroup, the carry trade will continue to work effectively in 2026. They advise choosing currencies of countries with tight monetary policy, high interest rates, and trustworthy central banks. The US dollar is under pressure from the rotation of investment portfolios away from American assets. By the end of the week, on January 21st, capital outflows from ETFs focused on these assets amounted to $17 billion. There are inflows into Europe and Japan, but they are not comparable to those into emerging markets. Specialized exchange-traded funds working with these assets have attracted $134 billion since the beginning of January, which is the best start since 2012. Rumors of another government shutdown are contributing to the decline in the USD index. Polymarket estimates the chances of such an outcome at 78%. This has risen significantly following the public and Democrats' reaction to the incidents in Minneapolis, which has intensified criticism of Donald Trump's anti-immigration policy. A shutdown could slow U.S. GDP growth and lead to a faster-than-expected return to monetary easing by the Fed. Rumors that the U.S. and Japan will conduct coordinated currency intervention to weaken the greenback and strengthen the yen are adding fuel to the Euro-USD rally. Recently, Finance Minister Scott Bessent said that there is no connection between the exchange rate and the strong dollar policy. The White House is keen to weaken the U.S. currency to boost the competitiveness of companies. Stay with Pro News for more updates on events in the financial markets. Like, share, and subscribe.